I would just like to state before the video starts, this is not financial advice. This is purely showing you how, as an investor, I pick a stock. So hopefully you can see one way that different investors pick their stocks. Okay, so today we're going to be looking at analytics and how I like to buy a stock. I'm going to hopefully make this one quite quick, as I don't want to talk too much, just give you the general gist of how you do some analytics, and then go through buying a stock with you as well. So what I like to use is Yahoo Finance. So on Yahoo Finance, you can come into this search bar here, and first one we're going to look at is a company called Octopus Renewable Infrastructure Trust Limited. So here you can type in the ticker, or you can type in the name of the company. I've just typed in the ticker here. And then on the first page, you have a lot of the information that the company gives. You can find all kinds of different information about, the market cap, the selling price. This is all really important when you are picking a stock. But today we're going to be looking at the balance sheet. So I'll go into financials, balance sheet. Now here we can see it's quite a small balance sheet. It doesn't give a lot of information on here. Normally there's a whole bunch of other things. We'll look at another company next to see what a full balance sheet kind of looks like. But we can see that this is potentially a good idea to invest in, because we've got our assets moving upwards over the last 3 years and our liabilities going down. That can be one reason for us to start looking at a company. Are they using their assets well to pay off their liabilities and therefore coming away with more at the end of it? Now, if you don't know about Octopus Energy or Octopus Renewable Infrastructure Trust, this is the generation side of the energy company. So they purely deal with making electricity for the grid. And this can be done in different ways. Often it's solar or wind with this company here, but it can be absolutely anything. So right now we're going to look at Doc Martens. So here we are. So we've got Doc Martens PLC, which PLC stands for Public Limited Company. So then we go into the financials again, and we go to balance sheet. And again, I just like to state here, in the previous one I didn't show you this, but this says all numbers are in thousands. So when you see something like this is thousands of. So it's I think this would be 228 million. So not 228,000. So here we have cash and cash equivalents. So this would be cash that the company has on hand that's liquidated and ready to put into different projects. Here we've got our total current assets. So these are all things that the company, such as inventory, is going to be using within the next years. It's going to be liquidated, and they expect to do that. So that's going to be like leather for shoes or plastic for the soles. And then we come down slightly further and we have total non-current assets. So this is things like machinery or the stores or whatever they have that they don't expect to be liquidating within the year. So here we've also got a few things. We've got goodwill and intangible assets. These are both things that Warren Buffett calls soft assets. They're everything over the actual price of the company and its value. So this will be like trademarks or brand recognition, and goodwill will purely be what someone has paid over the original price that it would have accumulated from all the parts of the company. Then we come down into our total current liabilities. And our total current liabilities is debt that the company is going to need to pay off within the next year. And then we have our total non-current liabilities, and this is anything that the company doesn't expect to be paying off within the next year. We also have retained earnings. And in the previous one, we had shareholder equity. Now, shareholder equity is the number that balances out the balance sheet. So if you take your total liabilities from your total assets, you get your shareholder equity. So this is what's left, and that is really what you use to balance the balance sheet there. Now, if we want to look at, is this a good idea to buy this stock? What a lot of investors like to do is take your total non-current assets and divide that by your total non-current liabilities. So if you have a ratio over 1, which in this case you do, then that would be a good idea to buy that stock. And if it's over 2, then it would probably be a great idea. And basically what this shows you is the ability, if the company goes under, to pay off its debts. Now, I like to personally take off these intangible assets and goodwill, and in that case, the company would not really be in the best position for a purchase. So that's just something to keep in mind. These are things that the company can sell, and therefore actually use to cover the debts. Not to necessarily make a profit, but use to cover the debts. And when you're a stockholder or you own shares in a company, you only do well if the company does well. If the company goes broke, then you've basically lost all of the reason you bought that company. What you want, if you're planning on investing long term, is to think, is this company going to be around for a long time? Do I know it well? And are they in a good position to be making sure that if they hit a hard time, are they going to be able to stay afloat? Okay, so that was a stock. Now, if we're talking about a bond, these are probably likely to be something like a bond. If you are buying bonds in a company, you're basically giving them money for a set amount of time, and that is a loan that they need to repay. So when a company goes bust and they have to sell off all of their assets, they will be made by the courts to pay back their debts. And a bond is a lot safer than a stock. It's still not guaranteed, but it's safer than a stock in the sense where if you buy that bond, then you'll be a priority debt. Okay, so now we've looked at our companies, and we're going to look into buying a share. Now here I've opened a practice account on Trading 212 just to show you the idea of it, and I've looked up Octopus Renewable Infrastructure, and what we're going to do is we're going to click on buy, and then we can see our value here. Now if I put 2,000 down, it shows me that it's this many shares, and we can also change it to do it by the number of shares. Say I want 2,000 shares, then it shows me the price that that's going to be, and this is at the current rate. Now we're going to review our order, and here we can see number of shares, the price it is, commission is free, stamp duty is applied, and this is the total price that we're going to pay. So we'll send buy order. So right now if you look, because it's a bank holiday Monday, this is shut, and therefore the order is not going to go through today, but it will go through tomorrow at 8 a.m. or there about that time. Once the orders hit the broker will buy it.